So welcome back to the Dallas Bankers Club show. I'm Dean Rosencrans, founder of the Dallas Bankers Club. Listen, I've been thinking about a show where we have an investment banking topic, and I know one of the better well-known investment bankers in town, Eric White with EBB Group. And so today I thought we would have a general discussion around the topics of investment banking. When is the right time to bring an investment banker in? What some of the terms are within the investment banking industry. And so I've got Eric with me, a longtime 25-year veteran, 100-plus transactions under his belt. And so we're just going to have a general discussion today and want to welcome Eric to the show. So welcome.
Dean, thank you.
Sure.
Really appreciate the opportunity.
Great. Well, you know, Eric, I've been in this business for 20-plus years. And there hasn't been probably a deal in the last 5 years that I haven't really had an investment banker involved with the transaction from an acquisition perspective or a growth perspective. So I really kind of want to understand the business of investment banking, when to bring in an investment banking firm. But more importantly, let's talk about EBB and how you started it and its current form today.
Great. Yeah, thank you, Dean. Like a lot of things that we've all dealt with in life, it didn't start off the way it's ended up. And when I started out of college, I worked for two large corporations, Frito-Lay and Kraft Foods. And so I think that gave me kind of indoctrination into the larger corporate world. And so as time went on through my 20s, I just turned 31, and I was anxious to start my own company and didn't know exactly what to do. And so I went and did my research and ran across this business brokerage firm called Empire Business Brokers. Mm-hmm. And so did that. I actually bought the franchise here in Dallas of Empire Business Brokers. Didn't even know what a business broker was, really. Right. But I had a background in finance and also in sales, and so I went down that road with Empire Business Brokers. I actually did it for 1 year, and I decided I don't want to sell small companies under $1 million. Business brokers in our world do a lot of mom and pop type transactions. Right. And because of my large corporate world experience, I wanted to do bigger things. And so it just evolved over the last 24 years to where we are today. And we became an investment bank about 3 years ago. Okay. And so our firm has 12 investment bankers. We have 30 total folks. Mm-hmm. We do business in 38 states, about 250 companies we represent. And our market is 10 to 500 million. That ballpark as far
middle
as
market.
Middle market, exactly.
Okay. So I'm a business owner, and I don't have a succession plan, or I don't have an heir apparent. When is it time to reach out to you as an investment banker, or what are my options as a business owner today?
Yeah, things have evolved over time in this world, and I really find that business owners have become much more astute. There's so many folks that have started a business 20, 30 years ago. They started in their garage, and they had no idea that it would become big, and it's become such a big part of their life. Really, everything they have is based on this business. It's now, 30 years old, and they might be in their mid-60s, situation like that. And so a lot of times they're thinking about it quite a bit. And so their peers maybe have sold their company, did really well. And so I really find that they start talking to their attorneys, their accountants, people in their social network about what it's like to sell a company. Right. So we don't see the complete novices like we used to. It seems like most people have some idea of what it takes to do a transaction. However, we also find out that they really don't know how to do it. Right. They have a general knowledge, which isn't always very accurate. And so, to answer your question, a lot of the owners, it is an education process. That when we first get introduced to a client, it is letting them know what the process looks like, how long it takes. Right. A lot of them have no idea how to value their company. Right. And so we really sit down with our valuation team and help them.
Is that somebody in-house as a valuation team?
We do. Okay. Yeah. Our bankers, a lot of us are very experienced, well over 150 years, like the last time I checked, of our business experience. there's a way to value a company, and usually in our world it's through precedent transactions. It's through knowing the market, just doing deals over the years. And as you probably know, being a banker, all businesses, whether it's 10 million or 10 billion, are sold off a multiple of EBITDA for the most part. And so we really just sit down with the owner, gather as much information as possible, and then help them determine what the range of value is for their company. And that's always the first step.
Well, you had mentioned a term that maybe some folks aren't familiar with, is precedent, right? And that they feel that their company is worth X until they realize that 4 other companies in the similar industry, maybe in various parts of the U.S., maybe not necessarily next door to them, either sold for less or potentially more. How do you advise a business owner that has built this company? It's their baby, and in a way they think that it's worth more, but you're trying to convince them you want to sell the business. What's the ultimate goal here? So how do you advise them on, because that's probably a big part of this, is what is your company worth?
It's the biggest part of it. There's many deals that we turn down because we are not on the same page with the owner about valuation. I got to tell you a funny story. One time we were dealing with a business owner, and this question came up about valuation. And you could tell he really didn't understand the multiples, didn't know what that meant, or EBITDA, any of that kind of stuff. But his whole reason, when I asked him what he thought the value of his business was, he said his brother sold his business for X, and he said, I'm way smarter than my brother, so I should get more than he got. So, we hear stuff like that, kind of ridiculous thoughts about value, but to go back to how we determine value, unfortunately, it's not like a real estate sale of homes. There's no MLS book. There's no, you can't check a neighborhood. Every business is very unique and different. However, within a category, there are similarities and structures of what kind of industry they're in. So we have access to really most everything in our industry through resources like PitchBook and D&B, where we can look at other transactions of similar scope, similar size, and we put all that into a package and then sit down with the owner and say, based on all this information, based on your business, based on the uniqueness that you have, we think your business is worth between X and Y. And if they don't agree with the range, then we generally shake hands and stay friends and just say, I just can't sell it for that. That's not within a range that we think is marketable.
Well, we talked about this prior to the show, that you have to probably, in a lot of cases, run into a business that has tried the process on their own. And ultimately, in the end, they've wasted time, potentially have run their business down a little bit, and just to come back to you and say, hey, now it's time to sell. Almost like your analogy of of a home sale. How many people have tried to sell their house on their own just to finally hire a broker who sells it in a day, because they are professionals and they know what they're doing and have access to a lot of other resources? So are you seeing the same trend in investment banking, where you've got the owner try to do the process on his own?
Yeah, absolutely. We don't see it as much as we used to see it, but clients today, they understand that well, I'll back up and say we had this conversation just today, and we have it quite often with a lot of our clients, is the most important thing they can do is run their business. I said that the time that you'll have a problem in selling your company is if your business dips, if it goes backwards. Every buyer is looking for companies that are showing positive growth and are at least holding firm. But when you start going backwards, that's very problematic, because people assume you're going to keep going backwards. So that's our biggest selling point to an owner. Do it yourself if you want to. If you feel like you can manage all of that, run your business successfully, and also do that, it's virtually impossible, I think. And very few times we run into that anymore. On smaller deals, I think you'll have an owner that's used to controlling everything. In the businesses that we are involved in, 10 to 500 million, the owner sits above the business in almost every case. They're not the sales manager. They're not the operations manager. They have an accounting firm. They have an attorney. attorney. They have professionals that they're used to using in every aspect. So in our world, fortunately, because it's not the same way in the business brokerage world, they know innately that they really can't do both. It's virtually impossible.
Right. So in today's market, are you seeing more of strategic acquisitions, or is it still a private equity sponsor-backed market right now?
Yeah, we tell people we view the world as really three different buckets of buyers. The first bucket is a financial buyer. That's generally private equity, and they don't necessarily care even what industry it in, what business it in. They're looking at cash flow. They're looking at a business that's making a certain amount of money that they could take over and make more money. So you have that. We don't deal many with financial buyers. The second bucket is really private equity strategic buyers. And what that means is that you have a private equity firm that's raised anywhere from $100 million to $1 billion. That's kind of the middle market that we deal in. And so they've already raised capital. And so these folks, let's say we're selling an aerospace firm. Well, we're looking for strategic.
A specialty of EBB, by the way.
It is. So we do a lot in the aerospace world. A lot of our folks came from aerospace. So in an aerospace type transaction, so we're looking for private equity groups with committed capital that have raised money that maybe own 2 or 3 other aerospace firms. And that's a strategic private equity sale. So that's the second bucket. The third bucket is a pure strategic. So in the aerospace world, we might have a large company that we would potentially talk to Lockheed about, or a large OEM in that industry. So really out of those 3 buckets, 2 of them are strategic, 1 strictly financial. So that's kind of how we view strategics. And there's no doubt that strategics will generally always pay a higher value for a company than a financial buyer will.
Is that the reason that a strategic buyer pays more? Is that they just see this as an opportunity to cut out all those inefficiencies?
Well, that's a big part of it. The synergies that are created when 2 companies come together in the same industry, I think that's a big part of it. To me, a bigger part of it is they understand that business really well. And it's like anything else in life, right? If you understand something deeper, you generally will pay more for it because you have more of an appreciation. If somebody would buy a Lamborghini and would pay all the money for it versus a Ford, there's a reason they pay more for it because they intimately understand all the assets that car has. The same thing with strategic buyers. They generally pay more because they deeply understand the business and they understand where the value is of the business.
So a lot of times, or not a lot of times, I would suspect that companies are dipping their toe into whether to sell. So how long does it take from the time that you would start a conversation, just more from a high level perspective, all the way to close? I mean, is it quick? Is it years in the making? Probably a combination of everything. How does that look?
Yeah, you hit it right on the head. It's a wide range. We closed a deal last year that was 4 years in the making. That's unusual. There was reasons for that. There's always reasons for things. But there's a reason that one got delayed. But for the most part, what we tell clients, from start to finish is generally 6 to 12 months. And that's when we first engage them. And it takes, so walk you a little bit through the process of timing. When we first are introduced to somebody, generally it's either through a lead or we have a business development department. We're constantly, we make cold calls every day. We have a list of probably 20,000 client potential leads throughout the country that we're calling. So once we talk to them, we're able to set up a meeting and answer all their questions about the process. That
What's
takes
a standard question that somebody would ask you?
Well, they ask us about the process, and then they ask us that question: how long does it take? How do you determine value? All of those kind of things. Which kind of buyers are you talking to? What experience do you have in our space? Have you ever sold an aerospace firm? I mean, they ask all those kind of things. They're trying to determine what kind of experience we have in selling something similar to what they've done. And so, as we kind of walk through with them, we talk about timing and gating things. And when we put together a package for a company, it's all built on relationships. And that sounds so trite because everybody will say relationships are important. But for us, I think more important than anything is because if you think about it, a business owner their family's wealth, everything is tied up in that business and has been for 30, 40 years. And so next to potentially getting married or having children, we really view this as a one-time event, the biggest event of their professional lives. And so they have to trust you deeply, and they have to respect you know what you're doing. And so it takes time to build that trust. And so really the process takes some time. And but if things go well and it's a sellable company, then generally 6 to 12 months is kind of what we target.
You raised or put out another word that I've always kind of been contemplating as to what is a sellable company and what makes it so sellable. So to make your job and the client's job a lot easier, so as an example, in my world, in commercial banking, we run a process as well, right? So very similar. I mean, there's banker in your, right? You're an investment banker, I'm commercial banker. So we kind of have the same kind of thing that we do in running a process that it could take years to develop a relationship. And by that time that it does happen, we still need things to run our process, like financials and just a bigger scope of what the company's been doing, and the EBITDA numbers are obviously very important, and audits are very important in a lot of cases for us.
Absolutely.
Not always necessary, but it does give us some comfort, I guess is the word, to say, okay, there's somebody else looking at the books here. But on the topic of sellable, we're bankers, and we build our relationships in a very similar fashion, and requiring a lot of financial information, et cetera. And that information, typically, if I have all of it at once instead of trickled in, and I can put a story together all at once so that a credit officer can make a decision, that's a sellable deal for us. Is it similar in investment banking that sometimes the information you need to put a SIM together or a package, is that a lot of it is trickled in, or maybe it isn't as, what you thought was a complex company that had, a decent ERP system and accounting system, you're coming to realize, there's QuickBooks here, or something that is slowing the process down?
Well, absolutely. One of the great things about becoming an investment bank is I don't have to deal with a lot of that anymore. We don't have companies that have QuickBooks. So it's much more professional run companies that we're working with. They generally all have ERP systems. They all have strong systems where we can get information. We set up private data rooms for all of our clients, and so they can just upload information directly into that.
Is it your own data room, or is it Intralinks or Syntrack or something similar probably?
Yeah, we have an internal system for data rooms that we set up. It's just confidential and private, where you have to have a password to get into it for buyers that qualify. So to answer your question about sellability, ours is a little different than that. My impression, we deal with bankers all the time, commercial bankers. You tend to be more in a box, and you got to check all of the nature of things, and this is. Being an investment bank allows us to be a little more outside the box. And so sellability, there's every company sellable, even if they're not profitable. And so for a banker to want to do a deal, it's generally got to be profitable, it's got to be moving forward, it's got to be an ongoing concern. Investment banking, we have not only ability to do merger and acquisition work, which is the majority of our work, we can also do capital raises, we can do debt restructurings. So just the nature of having an SEC license, we're able to do different things. And so there's a lot of situations where we'll be dealing with a client that maybe their business isn't as strong as it needs to be to go to market. Well, we might work with them to do a capital raise to strengthen the company and then sell it in 2 years. So we really always try to feel like we're consultants, and we take our clients where they need to go and not force any particular outcome, whether it's an M&A. Maybe they need to wait 2 years, and it depends on where they are in their business cycle.
Does your firm have any ability to do non-banking or non-bank type transactions, i.e. revolvers or term loans or things like that? Obviously, a term loan, I would think, that's fairly simple for a non-bank investment bank to do, but would you do revolvers?
Really don't. I mean, it's kind of like, knowing what you do well and not getting involved in things you don't do well.
Sure.
And so we try to be focused on what we do well, and what we've done for 25 years is merger and acquisitions and selling companies. So we mostly do that, and we advise clients on the best way to do it, the timing of when to do it, and again, if they do need other services like a capital raise to bridge a situation, we do get involved in that. Not as much term loans or anything like that. We leave that to the commercial bankers that are much better at it than we are. So.
Well, so you are in a highly regulated industry, FINRA and the SEC. I know from the standpoint, we as bankers are regulated by OCC, FDIC, the Fed, you name it. And for today's show, we weren't really going to talk about specific deals or anything, but give our viewers an example of a win and what makes a good win for you, and what makes it has to be win-win. I think we've talked about win-win in prior discussions. What's a win-win situation for you and the seller?
Absolutely. Again, that's kind of a trite phrase, but it's very real, and we use it all the time. And it's and what a win-win truly means is if we can accomplish the goals and the objectives of the owner of the business, and we have to really deeply know what that is and why they want to sell. What do they want to get out of the transaction? Do they want to stay with the business? Do they want their kids to run the business? A multitude of things. We really have to understand what their goals are. But if we can help them achieve their goals, and certainly we win also. Not only in fees, that's certainly nice, and that's a big part of our world, but we have relationships with folks that are on our reference list that mean everything to us, that we've had for 20 years. And it really helps, and it's a great feeling of comfort when a new client that we're talking to, that maybe they like what we say or don't like what we say, but we say, don't take our word for it, call these 10 companies, 20 companies, however many you want to, and just ask them about the process and ask if we were able to help them accomplish their goals. So that to me is a win-win, and it's very gratifying to have owners that we've stayed in touch with all these years, that we're still friends with, we're still close to. They invite us to things, and really almost a part of their family, because we were able to help them achieve the biggest thing in their professional lives, and we take a lot of pride in that.
So you got to look back at your 25-year career and look at EBB and just be beaming with pride. I mean, you've built a great company, and you're Texas-based, and what's in the future for Eric White and EBB?
Well, I appreciate that. We're very blessed. We're very grateful. Everybody that works for us, I consider a friend as much as a colleague. They're all handpicked, and life's too short. You and I have talked. It's not worth it being around people that you don't enjoy being with. So I feel like we have a strong team, and people enjoy working together, and so we're going to continue to grow. We now are, like I mentioned at the start of the show, I think several years ago we were probably a 10-person firm. Today we're a 30-person firm. We're in 38 states, so we hope to be in 50 states. So we're always looking for another transaction in a state we're not in, even Alaska or Hawaii, whatever the case might be.
So when you say another state that you're not in, are physical locations or just transactions around the country?
Transactions. Today we have offices in Los Angeles, Dallas, Houston, Charlotte, Tampa, and New York. So we are certainly looking for an office in Chicago. That's kind of my big focus right now. We feel like we need that upper Midwest coverage. And so, just to continue to look for good people where we could grow and expand our business and keep in that middle market. We really have no desire to kind of go up with the Goldman Sachs of the world and sell multi-billion-dollar companies. Most of those companies that they do are public companies. The companies we represent are all private. And so we really like that niche of the market of private companies.
So, a lot of our viewers are young bankers, and some are probably wondering, well, do I go into commercial banking, energy banking, business banking, healthcare banking? Everybody, when I was growing up in this industry, everybody wanted to be an investment banker, right? What are some of the draws to being an investment banker? If I'm a young banker, why would I want to come into investment banking and do 100 hours a week?
Well, good question. I think most people would they watch TV and they watch movies and they think of investment banking as Wall Street.
Gordon
Gekko of Wall Street. I think I was the same way even. I kind of had a romantic version of investment bankers and being a guy on Wall Street. And I realized, though, that the investment banking world, that's a tiny percentage of really what the investment banking world's all about. And there's a number of boutique firms like ours around the country that fill a certain need. The thing I like about our industry is that it's not easy to get into.
Sure.
Things, if everybody could do it, there's not as much value in that.
Right.
Our industry have to be licensed, and it's not easy. I can tell you honestly, it's a difficult process to, especially somebody that's hadn't been in college in 20, 30 years, and to go back and study like you're in college. It's a challenge, but I can say it's very rewarding. I mean, if you work that hard to become licensed, it is a very rewarding career, and we love it.
So I am, as an example, let's say I'm 55 years old, and I've run the gamut of banking. I really want to make a transition. What is the license that I need to get into investment banking? And then you probably have to have a sponsor. You just can't walk out and get a license and that's it. There has to be a sponsor involved to hang your license. Is that right? There
is. No, good question. A lot of people don't understand the process of getting a securities license. So you do have to have a sponsor, a broker-dealer. That's a big part of it. They have to sponsor you to be able to get the licenses necessary. In our world, you don't need a Series 7. And a lot of people know about the securities industry and thinking of selling stocks and things like that. Well, you need a Series 7 to do that. In our industry, it was a number of years ago, 10, 15 years ago, they made the decision that there's a lot of people in the securities industry that aren't selling stock. They might be selling a business. And so they created a separate license. It's a 79. So in our industry, you have to have a 63, which is a state license. You have to have a 79, which allows you to do merger and acquisition, investment banker rep license. And then as of October 2018, a brand new law was passed that you had to, now everybody getting in this industry has to pass something called the Securities Industry Essentials, SIE exam. So that's
that if you take that exam and you pass it, do you still have to take the 79?
Yes, absolutely. You have to have those 3 licenses. To do capital raises, which is part of investment banking, you either have to have a Series 7, which we discussed, or you have to have the much shorter Series 82 license. So there's a number of licenses. There's way more than that. But
I know. I can imagine. I've seen them, 1 to 100.
There's a bunch. But in our world, to be in the merger and acquisition world, it's pretty much those 4. 63 SIE, 79, and 82.
So getting to one of the topics here that I have had in the back of my mind, and these are those that are selling businesses and doing capital raises that aren't necessarily licensed. I mean, you really can't do that. You really shouldn't strike out on your own to try to do a capital raise and run a formal process when you really don't have a broker-dealer behind you or a license. I mean, I see some of this in the market. What are some of the penalties for doing something like that?
Well, I'll tell you, you absolutely shouldn't do it. And I'll tell you the biggest reason why, if you don't have a license, you can't lose your license. However, the big risk and the reason we decided to become investment bank, you could work for a year on a deal and literally just not get paid. And so I don't think anybody likes to be in a position where they don't get a fee for a year of hard work. And that's very likely the result if you're involved in something like that. So no, that's why I love this industry. It's not easy to get into. Barrier to entry. You've got to work to get your license, but it's very rewarding once you do.
So you're doing all over the country. Any international transactions that you can get involved with?
We're not representing any companies presently internationally. Okay. A lot of buyers that we talk to are international buyers. Okay. There's no doubt there's a great desire to get in the United States market. We have the best economy in the world, obviously. So we have a lot of foreign buyers that are looking to enter. And, we go through the same process with them as anybody else. So just making sure that they're accredited and make sure that they're have the wherewithal to buy a company.
Sure. And, there's another term there, accredited, that you hear a lot about. Why don't you tell a little bit about what accreditation means for an investor in one of your transactions?
Yeah, one of the things it's also good and difference between a business broker and an investment bank. Business brokers are working on smaller deals, so with that comes different buyers, and they work a lot of times with individuals that maybe have to get an SBA loan. They might go through your bank on an SBA loan, that type of thing. So it's they generally are not accredited, and so there's a great risk in working with folks that are not accredited. And there's definitions of accreditation of how much net worth, average income, just a lot. I want to go into it. There's a number of different criteria of how you are accredited, and so we're working with the vast majority of our purchasers are private equity or family offices, strategic, and they're all accredited. Yeah. They all have over $100 million in assets under management, which makes them accredited. Right. A lot of them have owned many companies. A lot of the private equity groups we work with might own 10 or 20 companies. So they've been through the process where they've done it many times. They already have bank relationships. And so that's part of the comfort of our world, that we are working with accredited, qualified buyers for any of the companies that we represent.
Okay. So, Eric, one of the other areas that I'd like to touch upon, and that's like a lot of us, is business development. I have to go out every day and build relationships, and a lot of my transactions or relationships that I have come from other relationships where they've referred me. And that's the ultimate, right, is when you're referred into another company. But oftentimes, there's, just in Texas alone, that fit my world, there's, 15 to 20,000 companies just in Texas alone. I don't have access to all those folks, right? So how do you find business in such a large market, especially in the United States, which is your sandbox?
Well, yeah, thank you for that. Dean, it's probably the biggest part of our business. It seems so obvious, but if you have nothing to sell, you can't sell it, right? So we focus on business development every day, more than most. It's a huge focus of our company. We have a business development department, but truly that's probably my biggest job as the owner of the company, is to head up business development as the face of the company. Fortunately, I love doing it, but it's not easy. It's a lot of cold calls. It's a lot of searching for companies. We have a lot of resources where we can buy lists based on SIC codes, based on a lot of criteria. So we start off looking for a certain type of company. We're looking for companies that are at least 20 years old, because we're not looking for young upstarts or looking for capital. We're looking for companies that are well established. So that's certainly a basic criteria of us. We look anywhere in the United States. We look in categories that we do a lot of stuff in. Certainly you mentioned aerospace. We're also involved in healthcare. We're involved in software. We're involved in any kind of manufacturing. A lot of different categories that we have lists for. So I think latest count, we have 20,000 companies across the United States that are anywhere from, and we generally look at employee count, because we don't always know how big the company is, but we can find employee count pretty easily. So we generally look for things above 50 employees up to 1,000. So we target of who we're going to go after. And then I'll tell you one quick story of how I look at business development, because I think it's difficult for a lot of people. It's difficult because you get rejected, right? So any of us that have made cold calls, you get rejected a lot more than you have success. But I was fortunate in Dallas to have gotten to know a gentleman that I think all of your viewers would know, and that's Zig Ziglar.
Yes, I love Zig.
An amazing human
Yeah.
being. I was fortunate enough to go to the same church as him, and so we got to know each other over the years. And but he always had one phrase as one of his books, "See You at the Top," and it was "Learn to love the word no."
Right.
And we firmly believe, and that's our motto in business development. And all that really means is if you can mentally prepare yourself where you believe that, and if you know if you made 20 calls and every single one of them will be no, and even a bad no. Maybe they say, don't ever call us again,
Right.
You're horrible, we hate you. But if you got one yes, and if you believed you would, then you're going to happily make 20 calls.
Yeah.
And I really kind of find myself doing that when we're making calls. I'll have all these no's,
Sure.
and you'll get off the phone and you're literally saying thank you. I really appreciate that because you've mentally trained yourself. You're going to get a yes. So that's kind of a trick that we've used, just mentally strong and not worry about somebody saying no. I've got to say, in all my years of doing this, my experience has been that business owners do not really reply to emails.
Right.
They don't really reply to flyers or anything like that. Unfortunately, the best and only way I've found to be successful at it is you got to pick up the phone,
That's right.
you got to reach the owner, and you got to talk to them, and you just got to get an audience. So.
You know, when you're talking to companies that are 20 plus years old or more, they're not millennials, right?
Absolutely.
So, you know,
Generally not, yeah.
digital isn't necessarily in their vernacular. So getting a hold of somebody that is of that ilk is very difficult. And, you know, I found success just exactly what you're saying is picking up the phone, but it's a process, right? I mean, for a lot of us, it is the snail mail, it's the email. With the advent of LinkedIn, hopefully they've got a LinkedIn account, but more often than not, they're the business owner. I don't need to know anybody. Right. So
exactly.
They're not even on LinkedIn, and you're not going to stalk them on Facebook.
Right. You're 100% right.
Right.
You know, technology is wonderful, and we
Yeah.
all love it, but a lot of the folks that are, have owned a company 20, 30, 40, 50
Yeah.
years, some of them don't even have email.
No.
I mean, it's really crazy. You would think that's not possible
right.
in today's world, but
With business development, it is a core to any business that you have to do it, and you've done it well, obviously. How many transactions do you typically do a year?
well, it depends, obviously, on the year. Every year, our goal's 10 to 12 transactions,
Okay.
and we've hit that a number of times. So that's kind of always what we're targeting. As we get bigger, I think we'll set our sights even bigger than doing that.
12 transactions, if you were to go with the concept of what you just said with 20 to 1, you've had to make a lot of calls to get to a final call or a final close.
Oh, absolutely. We represent today 250 companies, like I mentioned, and of those 250, we have it's probably 10,000 calls to get 250.
Sure.
So it's something you got to do every day. That's what I found. You can't do it some weeks and not weeks do it.
That's right.
So we do it every day.
All the way up to the CEO, up to you.
Absolutely.
Yeah. Okay. So, University of Arkansas, how are they going to do this year?
I hope well, but they're in the same conference with Alabama, LSU.
Well, they're going to
and,
be down here, aren't they, against A&M next
I
week?
think so, yeah, at that Jerry World.
Going to the game?
I am not. I'll be traveling, but
All right.
I've been in Texas 30 years, so I more root for the Longhorns than I do for the
really?
Razorbacks. So.
Okay, I got one at A&M, so I have to, in a way, go with the Aggies.
I understand.
So, and SMU and University of Dallas.
Yeah, absolutely.
Well, a lot of education there.
We're always learning every day,
Yeah,
right?
that's right.
It's always an experience.
Well, Eric, I really appreciate you being on the show. This, I'm thinking, can be a great topic for future shows. There's so many niches that are part of this industry that I hope you can be a guest again on the Dallas Bankers Club show. And I hope to see you again on that.
Yeah, I'd be honored. Thank you, Dean.
Well, so everybody, that's another episode of the Dallas Bankers Club show with Eric White with EBB Group. For more information, reach out to Eric, and if you have some interest in your business and kind of understanding a little bit more about how to sell it, Eric is your resource. So at the end of this show, you'll see some contact information for Eric, and until we see each other again, cheers.